Welcome back, everyone. My bull case for AMD stock is nearly $200 per share. But first, today I'm officially launching your new favorite YouTube series. I call it Valuation Fridays. I will be valuing a company every Friday, so make sure you subscribe and click the notification bell so you don't miss a valuation video. These videos will provide so much value to you. What is Valuation Friday, you ask? I do a deep dive into a company. I discuss the company overview, the financials, and I create a DCF valuation model with conservative, base, and optimistic cases. And just keep in mind, sorry for my voice, I'm getting off of a cold, but I need to get this video out by, Friday. So today, as mentioned, we are delving into the fast-paced world of semiconductor technology, and more specifically, we're talking about AMD, Advanced Micro Devices. If you're interested in the potential of a tech giant that's been making waves, you're in for a treat. So stay tuned for the exploration of the AMD investment thesis. Before we dive into the investment thesis, let's take a quick trip down memory lane. Founded in 1969, AMD has been a key player in the semiconductor industry. Over the years, they've become known for challenging the status quo and providing stiff competition to industry giants, namely Intel and Nvidia. Today, we'll be exploring why AMD might be a compelling investment option. A company is only as strong as its leaders, so I usually put that near the top. Lisa Su was born in Taiwan in 1969. She got her PhD in electrical engineering at MIT. And actually, she had a choice, a funny story. She had a choice between studying electrical engineering or computer science. She chose electrical engineering because it seemed like the most difficult major at MIT. How many of us can say that? Not me. One of the key growth areas for AMD is the data center market. With the increasing demand of cloud computing and data processing, AMD's EPYC processors have found a solid footing. As more businesses transition to cloud-based solutions, AMD is well positioned to capitalize on this trend and potentially grab a larger share of the lucrative data center market. According to analysts, AMD is expected to attain 20% CPU market share in data center this year. That is up from virtually zero market share just a handful of years ago. So it's actually pretty crazy. AI is all the excitement these days, and that is where the MI300 plays. The MI300 is AMD's most important product since the Ryzen. AI is split basically into two main categories. You have trading and you have inference. The MI300 is geared towards inference. And by the way, if you want me to explain the difference between the two, just let me know in the comments below and I'll create a special video just for you. AMD does not currently have a trading-centric chip in the lineup, but I expect them to have one within 12 months, give or take, as a MI300 successor variant. The MI300 will compete with the NVIDIA H100 and their later variants like the H200 and so on. The H100 recently had a sticker price of $40,000 each. You heard that right. Can you imagine the margins? Oh boy. The average selling price of the MI300 will be large, as Gene Hu mentioned in the Q3 Earnings Call that the MI300 will raise AMD's gross margin percentage in 2024. However, I don't quite know what price it will be. Nobody knows yet, but it is currently rolling out actually as I create this video, and as you see it tomorrow, you will see. It's currently rolling out. Lisa Su has mentioned that she expects AI to grow from a $30 billion industry today to $150 billion in 2027. And that's a 50% CAGR over the next 4 years. This will play a part in my valuation model for AMD, which you'll see in a bit. Moving on to client, the stuff you use. This category is basically Ryzen. Along with Epic, Ryzen is the other product that brought AMD back from near death. AMD has consistently gained market share in the CPU space since the launch of Ryzen, which is now estimated at 34.6%. AMD has a performance, efficiency, gaming, and core count edge over Intel in the client CPU space. And to have an edge in all those areas basically means they have an edge in everything over Intel. Intel's got some catching up to do. The Ryzen 7800 X3D chip is the best gaming chip on the market and is the best gaming chip basically ever created for consumers. AMD entered the GPU market with their purchase of ATI many moons ago. Since entering the GPU market, AMD has always been a distant second to NVIDIA. The market share chart shows you all you need to know about this segment. Yeah, it is what it is. The one bright spot is AMD is leveraging their GPU technology in the MI300 to bolster their data center business to new heights. In a way, AMD's adventure into gaming, so to speak, is going to bring them fortune in 2024 and beyond, even though that fortune is outside of the gaming market. On top of that, AMD also powers the PS5 and Xbox consoles. Embedded is almost entirely made of products brought on by the Xilinx acquisition. These include FPGAs, adaptive SoCs and SOMs, and embedded CPUs and GPUs. If you don't know what those are, you're not alone. Honestly, the only real quasi-understandable one is FPGAs. Those are customizable chips used in AI and other applications. They're basically chips that customers can modify. AMD, through this acquisition, is the number one player in the FPGA market, with Intel in a very distant number 2. And before I get into the financials and then the DCF, don't forget to like and subscribe. See, even she subscribed. Isn't she cute? Let me turn off the camera. There you go. Okay, enough of the overview. Time for the financials. After financials will be my DCF valuation. AMD has a market cap of $183 billion, far behind NVIDIA. NVIDIA is a $1 trillion company, just to keep in mind, but this is ahead of Intel. They have a forward PE of 30, if you trust analysts. The average analyst target is $130.11, a nearly 15% upside. Actually, one analyst gives AMD a price target of $190. Are they correct? Let's see. Revenue growth has been nothing short of impressive. The decline in the bottom line in 2022 is mostly due to acquisition costs and increased research and development spending. But as you can see by their revenues, they are still growing very quickly. Revenues have been stagnant for the last several quarters, actually, due to an inventory glut. See, what happened was coming out of the pandemic, there was a significant shortage in chips, which I'm sure you've heard about. The shortage is mostly over, but this caused a glut. There's now an excess of inventory in the market, and that excess of inventory has lasted for several quarters. However, now in Q3, this most recently closed quarter, that inventory glut is now fixed. Aside from embedded chips, those still have too much inventory. So now growth rates should be more normal, with a headwind from the MI300 this quarter. That will be a huge headwind, which we'll discuss in a moment. GAAP gross margin has been increasing since the acquisition costs of Xilinx are abating. Non-GAAP gross margin has remained steady at about 50 to 51% and is expected to go up next year. Now, the inventory issues I mentioned earlier caused the EPS drops for the last several quarters. That's why you see Q4, Q1, Q2 with just really bad numbers, honestly. And that's due to the huge amount of product in inventory waiting to be sold through. So AMD had to defer their shipments till later. They had to sort of just, stop selling for a while. But as you can see, it is fixed now, and they recorded 18 cents in EPS last quarter, and that will, increase going forward. Now, the most notable thing about the data center segment is that HPC combined with the MI300 is expected to increase revenue in the segment by $400 million this quarter. This quarter alone. You see, the MI300 is just launching. The MI300 is expected to increase revenue by $2 billion next year. This was all reported in the most recent earnings call. AMD mentioned that there is supply capacity for the MI300 to exceed $2 billion next year, should demand require it. She did not give an exact figure of what it would be in the future, just that it could increase. So I'm not accounting for that in this model. I'm just going to put the $2 billion that she quoted, since that's their expectations. Lisa also mentioned that they have supply to go beyond. Oh, sorry, I mentioned that. Showcasing the clearing of inventories is the client segment. You can see that huge increase in revenue. It's a fantastic 42% year-over-year increase, and a return to positive operating income from negative 3%, which is to positive 10%, which is still low but getting better, and it will improve significantly in future quarters. Growth is driven by the Ryzen 7000 series, which is crushing Intel in performance and efficiency. AMD has $3 billion more in cash than debt, which is always a good thing. Revenue next quarter is expected to be around $6.1 billion with gross margin at 51.5%. Competition. Now that is the biggest risk for AMD is competition. Both Intel and NVIDIA are fierce competitors. Competition is so fierce that AMD was nearly a bankrupt company a decade ago. The stock was worth just north of $2 a share in 2015. Wow. Server market share was virtually zero. Look at this graph. Right up above. Look at these. Just look at that line. Actually, I'm not in the way anymore. Just look at that line. It's virtually zero. They had market share. They had over 25% back in 2006 or so. But yeah, they were just crushed by Intel's anti-competitive practices, and other reasons. Their chips actually sucked at the time. So they were just dominated in that region and nearly bankrupt. So how do you make a comeback from zero? Well, AMD found a way. It has to do with creating better chips. That's really it. And just as another point of reference, just look how long AMD was in trouble. They were, as mentioned, they were nearly bankrupt. Just look at these numbers. That's terrible. Look at the time span. 2006 to 2020. This is a long period of time. This is not just 2 quarters. This is, 14 years of nonsense. It's insane. But yeah, Lisa Su came out in 2014. You can see after 2014, they actually went, down into the negative a little bit since they started R&D on Ryzen. But then once Ryzen launched, 5 years later, about 5 years later, that's when it starts skyrocketing, because it takes about 5 years to develop a chip from scratch. And that's actually going to play a factor a little bit later in this video as well. Now, next up is what you've all been waiting for, my DCF evaluation. But first, I wanted to show you my free investment reports. Yes, totally free. I have free investment reports on my Patreon. Yes, I know, I get the Patreon stigma, but I made these public so you can actually access these. If you notice up above, I'm in incognito mode. I'm not even logged in, so this is actually what you would see. and you can see the login button up above. And you're right, there's the download for this would be NVIDIA's investment thesis. Also have one for Square, and AMD will be on here as well. And I'm also going to be creating more investment reports weekly, and they will be added to this Patreon as well. Now here's AMD's last 5 years numbers. Now this is a little bit interesting. The green boxes are directly from AMD's financials. The white boxes are calculated columns. I count for items a little bit differently than AMD, so I can keep the years consistent. For example, I tend to avoid one-time events like acquisition costs. So revenue growth has been quite nice. This isn't the whole picture though. We need to dig deeper. AMD restructured the business segment in 2022, so we don't have much segment history. Data center growth has been good from $3.7 billion in 2021 to $6 billion in 2022. I project growth to follow Lisa Su's prediction for a 50% CAGR between now and 2027, then trailing off to a 10% growth as we enter an AI supercycle. Now keep in mind, I actually think these numbers are conservative because Lisa Su, that when she mentioned a 50% CAGR on the AI market in the next 4 years, she was specifying the whole market as a TAM. However, there's one player in this market that's 95% market share, that's NVIDIA, and there's the other player which has almost 0% market share in the market. Now, it's a lot easier to go from, say, for example, 5% to 10% and double your market share than it is to go from 95% to 180%. That's impossible. That's literally impossible. So NVIDIA will be bleeding market share in artificial intelligence chips. It's just the way of the land. It's what happens when you have 90% market share and there's new entrants. You're going to lose share. It's not, a slight on NVIDIA. They do have the best chips on the market right now. But you cannot retain a 95% market share with new entrants. That's all I'm saying. And AMD's gains should exceed these 50% CAGR growth rates mentioned by Lisa. However, I wanted to stay on the conservative side since we don't have insight into exactly what the numbers will be next year and going forward, since she just said these numbers a couple weeks ago. So that said, I'm just going to go with her numbers and just put 50% and just as an asterisk that I think it's conservative. The inventory glut can be clearly seen here, going from 2021 to 2022 to 2023, and client revenue declined significantly. These are years. However, they've been fixed. As of Q3 of this year, the inventory glut is fixed. Ryzen 7000 is doing great. Going forward, I am projecting 15% growth in 2024 next year, trailing off to 6% growth in 2032. Because in processors, you can only get so much market share. You can't go over 100%. So as you get bigger and bigger and get more and more market share, your growth will trend towards the overall market growth. Gaming, on the other hand, is a highly cyclical industry. There's very high troughs and very high peaks and very low troughs. However, I cannot time when these peaks and troughs will be. So what I do here is I'm just averaging it because I don't want to time it. I don't try to time the market, so I don't try to time this. So I'm just averaging it just to keep it simple. So I'm projecting growth in 2024 of 10%, trailing off to 5% in 2032. Now ignore the growth from 2021 to 2022 in embedded. That is literally just the Xilinx acquisition. That was a huge acquisition for AMD, and that's what this is. So I project 15% growth in 2024, trailing off to 5% in 2032. Again, I think this is conservative. Prior to the acquisition, Xilinx was growing at a pretty reliable 20%. So I'm trying to be conservative in these numbers, and this is my base case. I think I'm being conservative in my base case. In almost all of these numbers, if not all of these numbers. The whack-a-mole chart. I'm issuing AMD an ultra-high discount rate of 11.67% due to a combination of today's high interest rates and their volatility. Please note that the higher the discount rate, the WACC, the lower the valuation. This value might be a little unfair though due to AMD's stability as a company and the strength of their balance sheet. And I'm just going to include the charts here for my base case. With 3 quarters this year already wrapped up, there isn't too much guesswork for 2023. I estimate that 2023 will come in at a slight decline in growth over 2022. Again, there was an inventory glut, a very large inventory glut. However, that's being fixed. In 2024, though, I'm projecting growth to resume at 20.16%, which is actually low based on AMD's historical standards of 30+%, and then trailing off down to 6.5% in 2032. Again, I think these numbers are conservative. As I mentioned before, I think it's really conservative in the AI space. We just don't have clarity there yet. Once we get the clarity, I'll be able to be more refined in these numbers, and then I'll adjust it. And I wouldn't be surprised if the numbers get adjusted upwards. This leaves us with an implied stock price of $136.32. Now here's the multiple valuation. The multiple is 31.45 because of the high margins that AMD has. Now what I do is I average the perpetual and multiple valuations to come up with the implied share price. Here's the conservative case. The implied share price is $140.32. The base case is $161.90. And for you optimists out there, $189.01. So I do get near $200 per share, and actually pretty close to the $190 analyst out there in my optimistic case. Comment down below, what company would you like me to value next? Or what do you think AMD's fair valuation is? And please don't forget to like and subscribe. Looking ahead, AMD is not just resting on its laurels. They have a strategic vision that includes expanding into new markets and developing innovative technologies. Their movement into AI is testament to this. In conclusion, AMD investment thesis is a compelling topic to explore. Their strong position in CPUs and data centers and their forward-looking strategies make them an exciting investment option. However, like any investment, it comes with its fair share of risks. It's essential to conduct thorough research and consider your investment goals and risk tolerance. Thank you for watching thank you for joining us in this discussion. If you found this video informative, please give it a like and subscribe to our channel for more exciting technical and investment content. Remember to do your own due diligence before making any investment decisions. We'll see you in the next video.